everyone. Good evening. I do hope that everyone had a wonderful weekend and had a great start of the week, and that you guys are having a productive week as well. I am Luciana Raspai. I am the Business Support Director at the CCESM, and welcome to this is the fifth episode of our webinar series in English for new businesses. I do hope that you guys got the opportunity to soak in all the information, the great information that was given to you over the past 2 weeks. And this evening, we have another very informative session entitled Assessing the Financial Needs of Your Project. So the objective of this webinar this evening is to ensure that you understand and you know how to identify the financial needs and understanding of the main principles of the forecast financial management of a company. And this evening with us, we have Mr. Bruno Lizet, who is an elected. Can Maya turn off her mic, please? Oh, I did it.
Yes, good evening, all. Thanks for to be with us tonight. Okay, so I'm Bruno Lizet. I'm expert accountant, certified accountant, and I will show you all I have plans for the forecast and plan management.
Yes, Mr. Lizet, just before you start your presentation, I would just like to give some persons a little bit about your background so they know exactly why we chose you, understand why we chose you, and why you were one of the fit persons to this presentation this evening. So Mr. Bruno Lizet has been working as a chartered accountant and independent auditor since 2013 after obtaining the DEC, which is the Diploma of Chartered Accountant. He created his firm ex nihilo at the beginning of 2013. His clientele covers all the social and economics actors of the island, craftsmen, traders, liberal professions, associations, and individuals. At the start of 2022, he established a new professional practice structure in Martinique, which includes 2 firms. He focuses for the rest of the year is a successful transition to digitalization. And this evening, Mr. Lizet is joining us from Martinique. So with no further ado, I will now give the floor to Mr. Lizet for his presentation on assessing the financial needs of your project. Please be reminded during the presentation, feel free to leave your questions in the comment sections, or if you wish to ask your question directly to Mr. Lizet after his presentation, you will also be able to do so. So again, I wishing you all a very good session, and I'll be back in just a few.
Thank you, Luciana. So we try the presentation, and it's prepared with PowerPoint. So the theme of tonight is assessing your financial needs for your project. So I will start with the objective of the webinar. The objective of this webinar tonight is to present the financial aspects of any business project, especially for business creators. In fact, it's done for business creators first, but also for business existing maybe for transition, for differentiation, to growth, etc. So the objective is to prepare the financial aspect and about what you think. So you have to identify your financial needs and to understand the main principle of the forecast financial management of a company, your future company. This webinar will help you to first define your financial projection and understand the 3 financial summaries for your projection. And you have to put your project into figures in 3 things. First, the financial plan. Second, the income statement. And finally, the cash flow projection. In fact, what you have to understand is a financial projection. It's with essentially 3 documents who does a whole. What is the financial projection? Financial projection, also called forecast study, is a document describing throughout text and bold the financial incidence of your future activity and of your management decision. Second point, importance to build a financial projection. To build a financial projection is an unavoidable step of all what has to think the business creator. Why? Because the best idea or project has to be economically sustainable. This is the reason why to build a financial projection is the best way to get relevant information on the incidence of your activity and strategic decision on your future results and on your future cash flows. In fact, generally, the creators have a good idea of what they want to do. They know how to own their business, but sometimes they don't really have the idea of how it will be during the future, especially on the economical aspect and also, and what is the most important, the financial aspect. This is the reason why to build financial projection before to start is absolutely, you have to do it. The mind of the financial projection. The business creator has generally a good vision of his future activity, how to operate, how to set up his business, and the most important thing, he trusts his project. It's what I just have told you before. On the economic and financial aspect of the project, it doesn't have to be pessimistic, otherwise you don't think to do business. Or on the contrary, too much optimistic. Why? Because maybe it will be hard later. So you have to be pragmatic, realistic. Fourth point, the limits of the financial projection. The financial projection is based on a realistic forecast, generally built on a period of 3 years. But we all know that the reality will be different and the real future results will be better or worse than what was planned or expected. I want to say maybe especially when we see the 2 last years, and we hope it will be better now, but it's not easy to plan what will be the activity, what will be how will be the business, and also the financial situation. I want to tell you some recommendation for the building of your financial projection. A financial projection has to be built around a precise plan, step by step. You have to explain first your project, your activity, your organization, your market, you as a manager, your qualification, competencies, professional experiences. What you have to know is the financial plan is done first for you. Why? Because you will need it to plan if your business will be sustainable, if it's a good financial idea, but also it's not for you. You will have some readers. The first one will be your banker. Why? Because when you will start your business, create it, you have to open a bank account. So and certainly or maybe to ask after a loan, and your banker will ask you financial plan, generally for 3 years, and not he doesn't want only to know and to see numbers, etc., but you want to know what you want to do, your business, how you feel it, and who you are. And maybe he knows what your activity is or not. This is the reason why the first part of the financial projection is to explain the project and you. It's what I have written there. The users of the financial projection, the first one is you. First, because you build it through your reasoning, and because you can use it after to compare your forecasts and your results. And the other readers will be your banker, your accountant, and all stakeholders, suppliers, etc. The use of the financial projection later to compare budget and what is done, it's really a good thing, because if you do it, for example, end of each month, you can see your progression, your growth, and if it's in the mood of what you have planned, and maybe your turnover is okay, the growth of your turnover, but maybe not your result, maybe not your financial situation. So it's really important to do it precisely. The financial projection is articulated around 3 statements. First, the financial plan. Second, the income statement, and at the end, the cash flow projection. In fact, there is an order between those 3 statements. Why? Because income statement comes from financial plan, and it's your activity, and the cash flow projection depends really of your income statement. The financial plan includes 2 parts: your needs and how to finance your needs. Your needs, donc first part of the financial plan. To start your activity, you will have to fix your professional area, to set up hardware, to buy maybe professional vehicle, and more generally, all your invest. So it depends of what kind of activity. If it's a shop, it's on services. So what you need to start. To support your starting expense. So you have some expense before the creation of your business, creation fees to do it. Maybe advertising, you need to be known if you want to work. and a lot of things at the beginning, small equipment, maybe for your office or for your shop, etc. And after, the last thing for your needs is to face up to general expenses during the first months of activity. Waiting for your turnover will be sufficient to sustain your charge. In fact, maybe at the beginning, your turnover can be good and enough to pay your expense. Generally, you need a couple of months, more or less. It depends on the activity, and you have to have on the side enough money to spend those months time to have enough activity to pay your regularly expense. So how to finance these needs? The financing of your needs is generally executed by means of, first, personal shareholders or family contribution, so it's your economy. Second part, loans, crowdfunding, suppliers credits, and after, maybe grants, subsidies. So it depends what kind of activity, what is your personal situation, and to get the benefits of those helps. So this is the two aspects of the financial plan, which is maybe you have to get the response how to finance your needs to start your activity. Otherwise, maybe it will be difficult to start your business. Or maybe you create it, but a couple of months after, it will be difficult. The second part of the document is the income statement. So the income statement will be generally established on a period of 3 years. The objective is to show to the readers the progress of your activity month after month and the impact of this progress on the economic results. Why 3 years? Because the first year is the year of the starting of the business. Maybe generally the second year is really a growth, and after the growth is a bit less, it depends, and after it will be plain. It depends how your strategy also. So it's the reason why this type of document must be done on the 3 years generally to get a good idea of the evolution of the business. The presentation of the income statement is the same as accounting financial statements, organized and split into first turnover, second part general expenses, third part taxes, wages, and social charge. After, financial and exceptional profit or losses, and to finish, the economic result before and after profit tax. So maybe some of you has already seen or studied financial statements. Maybe for some it's something not known. So it's the reason why on the next slide I start to show you how it is presented. The third part of the document will be the cash flow projection, directly extracted from the income statements The third part of your financial projection is a cash flow projection. The object of the cash flow projection is to show end of month after end of month the progress of the available treasurership, and to confirm that the company will not be at what point or during a period in a situation of cash shortage or close to zero. A good progress of the cash flow shown by the cash flow projection is a gauge that the company will be able to reimburse the loans, the funds and the deposit of the shareholders, to pay dividends, and also to grow the structure to invest. The result is to build the financial projection with more or less 10% of income to show the impact of the fluctuations on the economic results and on the cash flow. So we say the cash flow for a company is world nerve, in fact. If there is money, the company can continue to work, to have activity, can progress, can pay the shareholder, you as the creator, and also what is important, to progress and maybe to invest, to have more income and more profit and more money, etc., etc., etc. A situation of cash flow negative in financial projection, I will not say it's something bad, but you have to think, to ask question, how could I manage maybe differently my project, or maybe I need more starting money to pass maybe a bad period after 6 months or 9 months. It depends. It's not always just at the beginning that the problem comes. Why? Because generally some expense like social fees or taxes come later. So you have to plan everything to be in a good position when you have to support those kind of expense. And the idea to badge the financial projection with maybe a difference of 10% or 15 or 25% of variation of the income, more or less, it's something important, because maybe if it's 10% less, for example, your cash flow projection stay positive, maybe if the activity is less at one moment than what you have planned, it's okay. You will pass the period. If you see negative cash flow and or close to zero, it will be difficult maybe, and you have to take that situation in case, especially we have to stay optimistic for the future, but we all know that it was hard the 2 years we spent. The income statement. The income statement plan is structured as a yearly statements, globally around 3 steps. First, the operating income. The operating income is turnover, so what is positive, less operating expenses, taxes, payroll and wages expense, depreciations, and amortizations. The current income is the operating income, what is calculated just before, plus or less financial and exceptional profit or losses. And finally, at the bottom of the income statement, you have the net income, it's current income less profit tax. The forecasts are studied and are usually presented over a period of 3 years to show to the readers the progress of the activity and the impact on the final income and cash flow. How to build the operating income? The first calculation to prepare is the estimate of the turnover of the first year of activity. This is certainly the harder study to do and also the most important to appreciate. Why? Because significant differences of your turnover will have significant impacts on the final income and on the future cash flow. This is the reason why you have to estimate reasonably your turnover. So after how to do it, it depends of what type of business. Depending of your activity, sales of goods or services or the both, my opinion is that the best is to split the first year into basic periods. It can be months, weeks, or days to determine a basic income. For example, for a restaurant, how many meals per day at which average amount? So you will have a day turnover. When you have a day turnover, you can have a week turnover if you open 5 or 6 days per week, a month turnover, and after a year turnover. Or for example, for the craftsman, how many hours per day or per week will I charge to my customers? And maybe there will be a growth because when I start my business, I have not a lot of work and not really known. So maybe I will work 20 hours per week or 40. And maybe later it will be more. It will be easy after to consolidate those basic amounts on month turnover and then to estimate the first year turnover. But you have also to estimate the growth during this first starting year. It's what I just have tried to explain you. It's the same for maybe for the shop. Time to be known, maybe a couple of months, not a lot of customers, or maybe sometimes the opposite. It's new, a lot of people come. It's like that during 2-3 months. After a bit less, and after, if you're good, it continues and it goes. For example, you will certainly have to take in consideration the impact of the seasonality of your activity. It's sure if it's a touristic business or mixed touristic and local business, you will work more during the season and less out of the season. Other criteria like fame and what I say, don't forget your vacation. Why? Because maybe you will work 12 months a year. Maybe the first year it will be like that, but if you plan to work, to don't take 4 weeks of vacation per year, you have to take in consideration in your calculation. After having determined the first year turnover, you have to decline it for the next 2 years. Generally, we use a growth ratio that you have to estimate. There is not, we don't say it's maybe 15% the second year, 10% more the third year. It depends on the activity. It depends how you feel your business. What is your strategy? Maybe you start small and after you playing with your turnover to buy some more invest, and it will be possible to do more, or maybe to take a salary, maybe somebody with you. So it's what Brighton. This is your business. You have to feed it, and the growth depends on your strategy and of many limits you have to estimate reasonably. For example, for craftsmen, if you work alone, you can work 40 hours per week, 50, 60, but there is a limit. There is one moment, even if you have work, even if you some people ask you to make, you can do, you arrive at the top. Down of this slide, an example of a presentation of a turnover for the craftsman business for 3 years. You can see 2 things, labor and parts. So 2 sectors, services and sales of goods. And for example, we planned the turnover for the first year 72,000 euros for services, and a growth of 15% the second year and 10% more. Same for sales of goods. Second steps, the operating expenses. The operating expenses are split into fixed charge, rent, insurance, phone, accounting fees, bank fees. In fact, it's charged not depending on your activity. The rent is always the same each month. You work, you open, you close, you have to pay the rent. And after, variable expenses, those expenses depend directly on the level of your activity. It's especially the cost of goods sold, including the shipping fees. So it's for the shops selling of goods. The same maybe for electricity, water, gasoline, consumable supplies. But some expenses can be sometimes fixed or variable expense. For example, maintenance, advertising, small equipment. As for the turnover presentation, the operating expenses have to be adjusted for the next 2 years in view of the progress of your activity. The next slide shows you an example of presentation of the operating expense. So at the top of the table, you have consumable supplies. So you have a growth year after year. So in fact, variables expense directly grows with the same rate generally as your turnover. For example, your goods, if your turnover growth of 15%, the buying of goods will be also growth of 15%. Maybe I take the example of a restaurant. It will be maybe the same for the gas, for electricity, for water. But for example, the rents don't move unless if there is each year regulation of the amount of the rent. And at the bottom, so you have the total of the expense and the growth year after year. The next step to finalize the binding of the operating income is a calculation of the amount of the taxes. So I take the example of Saint-Martin. So droit de licence et patente, taxe d'apprentissage, formation continue. As a reminder, TGCA perceived on invoices is not a deductible tax. What you pay, you don't have to deduct. You collect it from your customer. It's not an income, and you have to refund it to the tax office. What I want to say for the TGCA, you don't find TGCA in the calculation of the operating income. It's not a charge. It's what I wanted to say. Even if you pay it, you pay what you collect. The wages and the social fees on wages and your remuneration and social fees attached on it. So it's all the part of salary and yourself. After, for your remuneration, it depends on your juridic status. So it depends if it's an individual business or a company, unipersonnel, so like EURL ou SASU, or SARL or SAS. So each type of juridic form concerning your remuneration and social fees, it will be different. And to finish, the calculation of the amortizing of the invest. So what you have to know is your invest, even if you buy them the first year to start, it's not an expense, a full expense of the year, but your invest are amortized during a certain number of years. It depends on their life. It can be 3 years, for example, for computers, 5 years for equipment, and 7 or 10 years for buildings or big things. And each year we deduct of the result of the operating income a part of depreciation for those invests. Here is an example of presentation of full operating income. So as you can see, at the top you have first the income. So this is an example of a shop. So you have sales of goods with a total exploitation income. So for the first years it was 144,000 euros. Just under you have the cost of goods sales. So the difference between the both 144 less 51, it will be the margin. Just under it's the consumable supplies. After other external services, and then you have the total external expenses, which is the add of consumable supplies and other external services. Under you have the taxes for the first wage, for the first year after no wage because no employees. This company decide to take employees at the beginning of the second year. You can see on the next column. The remuneration of the company director and his social fees. The total amount wages and social fees. Under the depreciation and amortization. Total operating expense, so 118,000 euros, and the operating income is the difference between the exploitation income, what you have at the top, 144,000 euros, less the operating expense, 118,000 euros. So it's 25 for the first years, 25,000 euros. So we have shown on this first part the presentation of the operating income. The second step is the building of the current income. The current income is obtained by adding the operating income, the financial, and the extraordinary income. The financial income is the difference between financial profits, for example, exchange gains, and financial expense, for example, loan interest. The exceptional income is the difference between exceptional profit, for example, sale of an invest, and exceptional expense, for example, penalties such as from tax office or social administrations. Last step, how to build the net income. The net income is the current income less profit tax. So profit tax concern especially companies, not individual business. The calculation of the profit tax depends on the legal form of your company and if your company is taxable or not to the profit tax. So, for example, not for entreprise individuelle, and with some kind of companies, for example, EURL, so SASU, or family SARL. In fact, individual companies are generally not don't have the profit tax to pay unless if they take the decision to pay it. It is can be a strategic decision or optimistic decision. It depends on your result and your personal situation. For that, the best is to see the accountant, and we have to do some situation and to take the best decision to pay the less as possible. Just to give you an idea, if your company has to pay the profit tax for it's 10% the rate in St. Martin, I precise, on the same national rates are up. It's 10% until 40,000 euros of profit and 20% above 40,000 euros of profit. Here is a presentation of a projected income statement in full. So all the first part is what we see before, the income, the operating income, okay. We see nearly at the bottom, it's our 25,000 euros, and just under financial expense and financial income, it was the current income, the profit tax, and the net income. Last part of the financial projection is the cash flow. The third and last part of the financial projection is the presentation of the evolution of the cash flow during the period. This projection begins with your starting cash, which will be your personal or family deposit, the release of loans and subsidies. So it is the plus, less the initial payments to start, for example, deposit for office or shop, first month rent, installation expenses, suppliers for initial stock of goods. After, how is built the projection cash flow? the progress of the cash flow projection will be ended by added to the previous cash flow, so the month before, the income cash flow of the period, decrease of the payments done during the period. The difficulty comes from the gap between the moment of the operation. For example, sending an invoice to a customer or receiving an invoice from a supplier and the moment of the payment. You send an invoice to your customer today, but maybe he will pay you next week or next month. Same thing, you receive today an invoice from your supplier. Maybe you pay it today, but maybe in 15 days or next month. This gap between time to the money of the operation will have a real impact in your cash flow projection. Negative for customer debts. Why? Because you wait after money. Positive for company debts. Why? Because you keep money before to pay your supplier or your tax or your fees. This is why you have to consider those gaps for the preparation of the cash flow projection. In fact, when you prepare your cash flow projection, it's easy somewhere, because you have to take to set up average gaps, one for customers, for example, 30 days or 15, it depends. It's the period you estimate. It's an average between people who pay it right when they receive the invoice and the time maybe they take. And for suppliers and social fees, it can be between 30 days and a trimester. It depends. Here is an example of monthly cash flow projection for the first year. So it's an example coming from a company who decide to do a first year of exercise on 18 months, not on 12 months. So it starts with turnover each month, less disbursement. So the cash flow variation is the difference between the both. For example, column of July 20, turnover, it was 43,000 euro, less disbursement 16,000 euro. So the cash flow variation was positive of 26,000 euros. And month after month, we add the difference between turnover and disbursement, and we have the cash flow, final cash flow, and the difference. It's not always up. Sometimes you can find some months less because you have a tax to pay, you have a social phase, and what is important is to never have cash flow end of period close to zero or negative. After the second year, it's the same thing, and the third year. We have successively described the three fundamental steps you have to present on your forecast study. The financial plan, it was the first, so your invoice and how to finance them. The income statement, so it's your activity, and the cash flow projection, the money. Each of those three parts result of the previous part, and the three parts form a whole. It's the reason why you have to present those 3 parts in your financial plan. The quality of your forecast depends on the quality of your SaaS. It's your business. You have the idea or how you want to own it, how you want to manage it, your strategic decision. And as I said at the beginning, you have to be pragmatic, realistic. It's what I said at the end. The forecast must be realistic, fair, and has to reflect how you think your business future will be. So take the time to prepare it, not alone. I say it's we can, as an accountant, to do a good financial plan, we need to have the good information. We need to speak with the creator and to build it together. Maybe just before to answer to your questions, I propose you to show you a full financial plan. I think it will be good for you to have the idea of the presentation, in fact. So alors, voilà. So it was a financial plan I did. See, it was years 14 to 17, so it's a long time ago. I changed the name of the company, Stella, of course. So, summary. Introduction. So when it's done by expert comptable, we have to put our attestation, what we did. So it's and we signed it, of course.
Excuse me, Mr. Lise,
Oui.
are you showing the document right now?
Yes, you see it or not?
No, we're not.
Ah, okay. So how to do it? Écran partagé. Do you see it?
No, still. Let me see if I can open it on my end.
Okay.
We can see something.
We're seeing the screen, actually.
You have something or not?
No, we're not. What I'm going to do, I'm going to share my screen because I have the document.
You have it?
Yeah, so I'll share my screen.
Okay. So I stop it and I
Yes.
let you present
Yes.
it and I comment. Thank you.
All right.
Okay, thank you.
Okay.
So, okay, so it's a presentation. Okay, first page. Okay. Summary. First thing, the note of the accountant, the attestation, what we do, what it is. So we explain it's a financial plan did by our professional rules, of course. The first thing, it's what I explained at the beginning of the presentation. It's not only numbers and column. You have to explain your project. Why? Because you know your project, you know who you are, but the reader of the document, not necessarily. So you have to give the maximum of good information to all the readers. So who you are, the juridic structure you choose, your profile. This one is really full. There is CV. It depends. You put it or not, but if it can help in your project, for example, what you do if you want to take the example, you want to open a restaurant, but you have 10 years of working in different restaurants. It's good to put it in the document. After, to explain your project, what you will do, your motivation, why you want to do it, how come from the idea. We can continue. Okay, after the name, voila, your market. You describe what you, for example, it's a shop for shoes. Okay, étude de marché, concurrency, regulation, your suppliers, your price politic, communication, your customers. After, your organization, juridic form, what kind of form and why do you have choose to that kind of form, where you do it. The administrative management, who will do it, it's you or not, the bank. Your conseil can be avocat, expert comptable. And after, we start with the numbers, in fact. So you see the first part on that one is really full. So we start with invest. And how it will be the financement of the invest. This is the first part of what I explained during the presentation, the plan de financement, in fact. After, the turnover, the expense, and after you have on that type of document, really, it's really detailed. So invest beginning, how it will be financed, financial. Okay, after activity, salaries, social fees, with the detailed employees and the manager, taxes, amortizing, compte de résultats prévisionnels, so it's income statement. Chiffre d'affaires, margin. So l'intermédiaire de gestion. So after we have a couple of financial documents directly extract from the statements. We give some information like margin, like valeur ajoutée. It's something really observed by bankers, for example, because it's financial indicators of the health of your business or of your project. The ratio, for example, we see for 100% of turnover, the margin will be 64%, value added 35%, so it's margin less expense. After excédent brut d'exploitation, it's value less taxes and salaries. Résultat d'exploitation, what we find. Alors, each time we see the rate from the turnover. So, for example, the résultat d'exploitation, it's 18% of the turnover. It's an indicator. And at the bottom, résultat net, so after profit tax, it will be 15%. We can see on that study, the result was 15% the first year, but only 9% the second year. Why? Because first year, no salaries, second year, salaries. So even if the turnover grows, maybe the result don't grow. So it's the reason why it's important to do it in 3 years to see all the fluctuation and the impact of the result, but on the cash flow. So the rentability, it's the number of day turnover to be at équilibre. I see the commentaries. I will answer. That's right. Besoin en fonds de roulement, it's something really important. It's the money you need to run daily your exploitation. In fact, the webinar, we only have 1 hour, but if you build your financial plan with accountant, he will explain you each of what means each of those things. And in annex, you have the treasury. And we arrive at the end. I hope it will be that kind of growth for everybody.
I also hope that it will also be that kind of growth.
Okay, so this document is really full. There is really a lot of things. Sometimes you can do it a bit less. It depends what kind of business, what you want to explain, who will be the readers also. But it's also the reflection of, it's also the, you show what you think and voilà. So thank you for your attention, and maybe it's time to answer to the questions.
Yes, we didn't lose anyone, so that's good. So I'm going to start with the first question.
And sorry
yes,
for my not really fluent English tonight. Sometimes it's better.
Well, we didn't lose anyone, so that this means that everyone understood clearly. Yes. So again, thank you. While I am going to be asking the questions, again, I'm inviting those that has questions, please, you may just leave them in the comment section. Or if you wish to ask your question directly to Mr. Lise, you may just raise your hand using the emoji. And I will jump right into our first question from Alex. If you want to compensate yourself in a sole proprietorship, how do you calculate this?
If you want to compensate your
yourself in a sole proprietorship, how do you calculate this? Si on veut se rémunérer en entreprise individuelle, comment on fait le calcul? Comment ça se passe?
Okay, so individual business, in fact, it's easy because your, I don't like to say your company, it's your, but you don't have salary sheet to do. You don't have a juridic document to prepare to do it. What you have to know, if you take, in fact, the money you take of your company will go in your personal current account. It's not a bank account, okay? Your account, compte de l'exploitant, it's called. On credit, it's all what you pay for your business. And debit, it's all what you take of your business, so what your business pay for you, or the money you transfer from the professional account to your personal account. So and it will have no impact on your result. So it's not a charge, it's not negative. And by the same time, when you bring money to your company, or if you pay something on your personal money, it's not it's not a produit. So on individual company, entreprise individuelle, parce que c'est pas une société, you don't have formalins to do. Maybe what you have to know also, it's there is a big changement a couple of months ago for entreprise individuelle. Why? Because and it's all these experts comptables who have decided this changement. Now with individual business, you have the same guarantee as for the company. So your own things can be taken in case of failure, first thing. And second thing, you can choose on if you want to be at for the tax office at impôt sur le revenu, so your personal tax declaration as it was always, or to be at the profit tax, and same thing to be at for the social fees at independent or social security system. So there is big changements with entreprise individuelle, and maybe it can be a good thing because we see really small businesses to don't be entreprise individuelle, who choose to be SASU, and SASU is not really done for entrepreneur individual. Voilà.
All right. I have a question that is going to, it's my question, that is going to follow with the question that was just asked. Many times I receive persons who want to register as a sole proprietorship, entreprise individuelle, and they, of course, a lot of them do not build their financial projection prior, and then they find themselves wanting to compensate themselves, as in to get a salary. In a case of it's a new entrepreneur and they're going to build their financial projection, how are they going to indicate that they're going to be getting a compensation in the financial projection? Because you said just now it's not an expense.
Yeah. Alors, in fact, what you have to know, no, it's not an expense, but especially for the readers and for a banker, what you want to see? You want to see your activity, your result. And if it grows, it's better. And you want to see also the cash flow. Why? Because the situation and the cash flow, when you do a financial plan like that, with no remuneration, no salary for the owner, because it's individual entreprise. You want to see how many stay after everything is paid, okay? To know if your business will leave enough money for you, because you need to live. If you're, unless if you have another activity, if you have, I don't know, buildings and rents, and you don't need to take money from your company. But maybe in the financial plan, it's good to write that maybe at the end or at what moment that your business will be able to to pay you, I don't know, maybe 1,000 euros the 6 first months, after maybe 1,020 to 200, or etc., etc. So we don't see it directly on the numbers, but to explain it or to write it, it's something important.
All right. Okay. Thank you for that answer. Next question, I guess someone who has a consultant services, they want to know, what do you recommend to calculate the turnover? Just now in your presentation, and I can't remember in which document, you had to indicate what will be your turnover. So what do you recommend for someone that has a consultant services, because they're not selling anything, it's services that they're going to be selling? How do you recommend them to calculate or to estimate their turnover?
For services?
Yes.
Services. I want to say it depends if you want to sell your hours of labor, for example, or you estimate, for example, for me, to do un prévisionnel, financial plan, what I show you just now, I can think I will need 4 hours, 5 hours, 7 hours, I don't know, and maybe 60 euros per hour. So I will say, okay, to do one document, it will be 400, 500, 600, 1,000, okay? Or I don't think on hours, I can say maybe to do that kind of operation, maybe, I don't know, to fix an antenna, the price is 150 euros or 300. If you know what kind of services you will do, if you have also an idea of the other, how many they charge, for example, it can help you. After, it's always the same. It's to find the basic, the unitary things, and how many per day or per week or per month, and also to estimate what will be your progression, especially during the first year.
Right. And you would base the turnover accordingly to how much your expenses. Let's say your expenses is 5,000 euro. You would want to base your turnover on at least, at a minimum, 5,000 to be able to match your expenses. All right. All right. Next question. Not everyone have the money while opening a business to get stuff done by a professional. So can I build my financial plan alone by following a template or by using an online template?
Yes, it's always it's always possible to do it to get help. I think it's better. Professional help is, of course, maybe some people who knows a bit. It depends. If you feel
comfortable,
yeah, comfortable or not to do it. One thing is sure. It's what I said. Even if you are professional, it's your business. So to build a good financial plan, we need your information. In fact, to build it, we have to build it together because we know we listen, you explain what you do, etc. And after we'll ask some precise question to have an idea to build your turnover, for example. Two kind of possibilities. We know the activity, so we have an idea how to plan it. After we adapt, it depends how you will do it. Or we absolutely have no idea of what you do or what can be the business, and it's you who knows because you know your market. Because voilà. After to do it alone, yes, it's possible. It's possible if you understand the logic. In fact, so to start from to calculate your turnover, start from your turnover. After you list, if you take Excel. With Excel, you can start. In fact, generally, it's what I ask to people who want to create their company and ask me to prepare a bit, and after we discuss on what they have prepared. Sometimes they forgot things. It's something normal also, and at the end we do a good document. Yeah, but after it's possible. I think maybe it's possible to find on the internet some examples or maybe some tools maybe to prepare it. After, in fact, there is one you show me. It's the one of Chamber of Commerce.
Yes, the CCI Business Builder.
Yeah, it's really a good thing also. We really help you to think to your project at the beginning. Everything is listed. Normally you forgot nothing. There is also with Initiative Saint-Martin, they help creators to prepare their business plan also.
All right. Okay. Next question. Some of the questions are actually making me laugh.
Yes.
How much does it cost to build a financial projection by a professional, and can you recommend any?
In fact, there is no fixed price. First, it depends of I want to say what kind of financial plan. It depends of the complexity maybe, but and after the amount, I said it can be from maybe 300 or 400 euros to 1,500. So after it depends. Some professionals, if you want just financial plan, it's one thing. If you want, I say, a full accompaniment to create the company, to go to the bank, to prepare the financial plan, and after we know also we do your accounting. So maybe it's said full service somewhere. So I know it's a cost. Everything is a cost, especially when you want to start your business and to wait that the first money comes.
Indeed, I know
Yeah.
that's one of the struggles that new businesses face in the creation phase, where they have to, I would say, dish out a lot of money to start the business. So yeah, that's some of them. But then again, a lot do not know how much it really costs to go by an accountant, and there is a whole taboo around it where if I go by the accountant, it's going to cost me a lot of money. Some say, okay, if I go by the accountant, it's going to cost me 3,000, 4,000. But sometimes what I do recommend them is just inquire. Nothing beats asking a question. Inquire by a professional how much it will cost, so at least you know, and maybe it's might be in your financial reach to get it done by a professional in order to ensure that your financial projection is realistic and also
Yeah.
is one that is in reality with the market and your project as well.
In fact, it's really important because for sure it's a cost, but if you don't do it, and what I said, you can have the best idea, but sometimes it arrives. I have example of people when we did the financial plan, we saw maybe after the end of the first year or 18 months or 20, it was nearly sure that it will be bankrupt. After, it's it's a plan, so maybe the reality is not that, but it's something important. After, it's not on. It's for you first. It's what I said. It's not only for you because generally bankers ask after financial plan and especially if you ask after a loan. So for sure you need to present a financial plan. But after you can ask to professional maybe not only one, and you will see how many ask to do it.
All right. And the other question was, you've mentioned it a little bit in your answer. Are those documents mandatory, which is the financial plan, the income statement, and the cash flow projections? Are those documents mandatory to open a professional bank account?
Not really. There is not a strict form of financial plan, but it's not the same if you send to the banker just one sheet with Excel and with 3 years and it's okay, turnover, and maybe it's the same. It's the same, and the result down, etc. Okay, and maybe it will be enough, and for him it will be okay. And document with a lot of information, with did by an accountant, and but the first thing for a banker is it's you, it's your project, and you have to trust you. If you give a really nice plan, but you don't trust your project, you don't open account, you don't give you loan. So,
all right.
but there is no strict form to present. So you can do it on Excel, and maybe also to write to present your project, who you are, what you do, how you feel. You have to sell your project, in fact, in that.
But you still need to provide the bank with some sort of numbered document that present the financial projection, whether it may be one paper or 2, 3, but you still need to present the bank with some sort of projection so they can actually open the bank account. I have someone from the bank who's there. I don't know if they want to confirm what I'm saying, confirm the question. If at their bank it is necessary to open a professional bank account, that you provide with at least at a minimum a financial document.
Good evening, Madam Raspai. To answer your question, yes, we would always recommend those documents if the client have the documents. We would love to have those. I was just writing a question, by the way, for the presenter concerning that. If the clients have the document, we would recommend to have them because it would always give a um, uplift the person project, and it would give you a better vision of what it is exactly that they would like to do. Like the gentleman was saying, if you the banker wants to hear you sell your project, like I would always tell my clients, make me dream, sell me your project, give me that reason, to want to do business and work with you. So having the financial document can be indeed a plus. But like I mentioned in my questions, I know it's very much costly for most persons. And now that I have the floor, I would ask my question, what I was about to send in the chat. Why is it that you all does not recommend entrepreneur to have a financial plan if they don't have a financial project? Because most of the time they would say, but I don't need one because I'm not asking for any money. And that I don't really get it, because then the professional cannot explain you correctly how it is that they're gonna generate and how it is they're gonna make their money. The last document that you was presenting, that Luciana was presenting, and you was commenting, I find it's very detailed and very it explains a lot of things. And those are the kind of documents that I think the clients, your all customers need to have, so they can have an idea of how much money they need to make. Thank
All
you.
right. Thank you very much, Alex Pierre, for that. I do hope that those who are here with us this evening are being in French we say sensibilisés by the importance of preparing those documents, having them in order for the banker to be able to understand your project and also how you're going to make money. I have just a question for Alex Pierre. When you say that persons, I don't know if you are referring to Mr. Lise and his colleagues, or you are referring to the chamber that we do not recommend persons to at least have those documents, even though they are not in financial assistance. They do not need financial assistance for their project.
I was referring to the gentleman and his colleagues.
Okay.
I would say because usually most of the time, the client would go. Most of them, they would probably go and ask a comptable, or even the chamber, because sometimes they would come to you guys because it does not have a cost, so they would easily go there. uh, that is something that I think we should really look into, because it's always good to have an idea, have a plan, even though if it's not detailed, like the gentleman was saying. Your plan would be detailed. All depends on the complexity of your project, or what it is that you want to do. But a simple plan can be a template. I think they would say in English, a trame, would be recommend for startups. That is just in my opinion.
All right. Thank you very much. And I will conclude by saying this, that your financial plan is not it's not determined by if you need to get subsidies or you need to get financing by your bank. Your financial projection, and it is very much explicit. It is a document that allows you to see how well your business is going to do on year 1, 2, 3, and allow you to know what is your strategy in order to be able to meet your expenses versus your revenues. So for me, it is not a question of if I need to get money from the bank. It is a document that you need in order to know how sustainable your business is going to be.
Yes.
Yes.
It's what I said at the beginning, and in fact it's a tool. It's a really tool to to decide and to manage.
Exactly. I'm not seeing any more questions, so I believe that that is going to wrap up our question and answer segment. While I am going to make the announcements for the closing announcement, I will just like to invite you to answer our survey. Please take the time to answer our survey. And while I am doing that, just reminding you our upcoming webinars. So this coming Thursday, we have Financing Your Project, which goes in line with the presentation of this evening. So we are going to have someone from ADI and someone from Initiative Saint-Martin who are going to present you what is their institution, what do they do, what are their financing programs. So I encourage you to register for those webinar. And then next week, Tuesday, we're going to be closing this English webinar series with the principle of the legal, social, and fiscal aspect. So that's where we're going to be talking about the legal forms, sole proprietorship, limited liability registration. How is that going to affect your personal status, your social status? What are the different taxes? So you also would want to register for that. The link for that, for the webinar of next week, is going to be available as of Thursday. So just in case you go on the website looking for that to register, it will be available as of Thursday. However, you can already save the date and make sure that you register for Thursday. And of course, I always end with the services of the CCE. So for next month, we're going to have a training that will be especially on the financial projection. So all the information, the first-hand information that you got today, you will be able to get further information on that topic in a training format. So it will be the entire day. If you're interested, you can already contact my colleague at the training department at formation@ccism.com. We will also be having a workshop for those who are interested and building their financial projection. And that workshop is going to be facilitated by Mr. Lise. We want to thank him for accepting to facilitate that session. And it will be on June 21st. So you can already save the date. The registration will also be online. There will be requirements for those who would like to participate to that workshop. So of course you will have, once you register, we will tell you what are the requirements, because again, like Mr. Lise said, building a financial projection requires a lot of time. It requires research as well. So in order to be able to get the most out of this workshop, it will require that you do some research and that you fill out a template prior to the workshop. So you can already save the date, and as soon as the information for the registration is out, you will receive an email. And last is the personal business support that is available for you if you wish to get a support for the building of your project. And that, if you're interested, you can already send us an email at cfe@ccism.com. And you also have the reminder, the CCA Business Builder tool that is at your disposal to help you, of course, build your financial projection documents as well. So this is the final announcement for this evening. I would first like to thank Mr. Lise for accepting to facilitate this webinar this evening, and thanking him for his time, and thanking him for logging in from all the way from Martinique. And I would like to thank everyone who participated in the webinar this evening. I do hope that the information that we brought to you was very much informative and you got a better understanding of what are the financial documents that are required for you to build your project, and you also got to understand why is it important for you to do those documents, to do those research. As you see, those who have been with us since the beginning, every step that we are presenting to you has its own importance, and you can see that all of them are linked together. As Mr. Lise was saying, that your financial projection goes with your strategy. So if you don't have a strategy, therefore it's pretty much difficult for you to build your financial projection. So you see, every step you need to cross them in order to be able to build your business plan at the very end. So again, your takeaway this evening should be the three important document that you need to prepare is the financial plan, the income statement, and the cash flow projection. You need to work on those documents before you register the business, the company, before you open your business, so you know where you are going and you have a plan. You also need to trust your project. And last, your financial projection needs to be realistic. So I thank you again for this. I do hope that you will be with us on Thursday, and I wish you all a wonderful evening.